We can't hear you if you're talking.
How about now? You hear me?
I can hear you now.
Okay, great. I'm just gonna wait a couple minutes and then we're gonna jump right into it. I wanted to give an update on GME. So let's take a All right, just about ready to start. I'm gonna start at 7:10, so 3 minutes. Bear with me, everyone. This is gonna be a good one. Even if it doesn't play out, it'll still be some good learning and, just learn how I use a Nimoy a little better. Okay, 2 more minutes and then we'll jump into it. Okay, let's start it up. So I'm going to get into GME, obviously, but before I start with that, I do want to give like a little beginner's tutorial to a Nimoy so that you guys could basically understand what I'm saying. So I'm going to go through this list. This is the S&P 100. I'm just going to pick any random stock to talk about. So let's just click on this one right here, AMGN. And I'm going to show you guys some like live examples of a Nimoy trading, and then we'll get into GME. So there's a lot of ways that you can use a Nimoy to trade, but for this stream in particular, I'm going to explain just about the 1 minute trigger and the 5 minute trigger and trigger crosses. So This right here would be a bullish trigger cross with the 1 minute trigger crossing above the 5 minute trigger. I'll remove price so you guys can see it a little better. So you can notice here how the 1 minute trigger crosses above the 5 minute trigger, and then, you know, price moves bullishly up until here. Here you get a little cross down, but once you get this cross down, price moves bearishly. So let's bring back price. So the way we would play this is, you know, let's say we were just trading this on a random Tuesday. We would buy calls on this bullish trigger cross, and then we would, you know, put on our velocity. And let's look at this sell-off. So here is your most extreme print to the upside. The velocity reading is 0.1072, and price at the time is 271. So remember, you went long off this trigger cross. And then here's your most extreme print. So we look for basically 3 new highs, and on the 3rd new high, if the velocity does not match this, that's your sell signal. So remember, I picked a completely random stock, but this works in every single stock and every occasion. So here's your first new high, and we can see the velocity did not make a new high. So that's your first bearish divergence. Here's your second new high. Velocity clearly did not make a new high. And then here is your 3rd new high, and velocity did not make a new high. So once you have your most extreme print, and then you have 3 new highs, so 1, 2, 3, that marks the reversal, and then you could see price come right back down. So that's like a, you know, a short, quick example of how we use the Nimoy. If we look at the 5 minute, we pretty much had the same thing. We had like the most extreme print right here, and then we had a higher high. Velocity did not make a higher high, that's bearish, and then price comes down. But what I want to bring out about this is something called an airplane setup. So an airplane setup is when the 1 minute trigger, which is this gold line right here, comes down to the 5 minute trigger and then bounces off it, like so. The 1 minute trigger comes down to the 5 minute trigger, gets really close, this is 20 cents away, and then once it lifts off it, that's bullish, and you'll see price make another move to the upside, usually into a new high. So you get the bullish cross, price is moving well, bouncing off the 1 minute trigger here, bouncing off the 5 minute trigger here, and then once you get this airplane, the algo is basically telling you that price wants to make a new high, and there's your new high. Since velocity did not make a new high, that's also your sell signal. So why am I bringing this up? The point of this is to show you that airplanes, you know, work really well on the 1 minute trigger and the 5 minute trigger, but we also find them all over the place with the hourly trigger and the daily trigger. Now, airplanes with the 1 minute trigger and the 5 minute trigger are, you know, they give price a little bit of a lift, but when you get them with the hourly trigger and the daily trigger, that's when you see these like huge moves to the upside. So let's give you some examples. So let's remove everything else, all the noise, and let's look at AMC. Okay, so let's remove price. You can see that the hourly trigger, just like the 1 minute trigger and the 5 minute trigger, here's the hourly trigger and the daily trigger. So the hourly trigger comes down to the daily trigger, bounces off it, and resolves to the upside. When that happens, price was about 730, and price basically doubled to the upside, right? Made a humongous move in a very short period of time. This is July 29th. In 10 days, price almost doubled from this airplane setup. So that's one example. Now let's look at some other examples. So we could look at Tilray. And if anybody wants to write in the comments any stock, you'll see that it works everywhere. So if you guys want to try it out, write a stock in the comment section and we'll take a look at it. So here's Tilray. The hourly trigger comes down to the daily trigger, resolves to the upside, and price makes a really big, strong, powerful push to the upside. It moves up a full $1. So Tilray gained 25% upside movement on this airplane. Now let's look at SoFi. I memorized a few examples for you guys. So and again, I'll get into GME, but this is just an introduction so you understand what I'm going to be saying next. Okay, so again, you could see that the hourly trigger comes down to the daily trigger. Price is 630. This is August 1st. And then the hourly trigger resolves to the upside, lifting price up, and price moves up to 827 August 3rd, 2 days later. So we had calls during this time period. Whenever we see these hourly trigger, daily trigger airplanes forming, that's when we buy calls, because you could have your stop loss right below the hourly trigger. So let's say we would enter right here as the hourly trigger starts curling up at like 636. We can have our stop loss right below 630 for a very, very excellent risk to reward entry. And then, you know, when we look for the divergences up here, that's when we can exit. Anybody want to write a stock in the comments, and then I'll just take a look at it so you could see like a live example, not one that I prepared. No. Let's see. Okay, so we could just go through any stock on the list, and we'll just do a couple more examples. Here. So, okay, BIG, BBBY, UPST. Okay, so here, this is an example of a beer plane, actually. So a beer plane is exactly the opposite of an airplane. The hourly trigger comes up to test the daily trigger, resolves to the downside, and price gets crushed. So it works both ways. The hourly trigger either comes down to the daily trigger, resolves to the upside, and that's a bullish move, or the hourly trigger comes up to test the daily trigger, resolves to the downside, and that's going to be a really bearish move. So let's take a look at BBBY. There was one on BBBY, actually, and it happened right here. So the hourly trigger came down to the daily trigger. Price was 10.50 at the time, resolved to the upside, and price moved all the way to 15. Didn't register on a Nimoy 15 because it was a quick spike, but that's a $5 move in the span of 2 days off this airplane setup. Ford, let's take a look. So Ford, nothing really here, but we do have a really nice beer plane in the beginning. So you can see that the hourly trigger came up to test the daily trigger. The hourly trigger resolves to the downside, and price gets crushed. So you can see that it works really well. We have this crawler section on the bottom right here that shows us hourly trigger, daily trigger when they're together, and then we can take a peek at them and see if there's any interesting setups. So let's talk about GME now, because this is what everybody came here for, and I want to give basically what might be happening on GME right here. So let's look at an airplane setup that happened in the past, which was right here. The hourly trigger came down to the daily trigger, resolved to the upside, and price went from 33 to 47. I don't know who remembers that spike. Rolf says, thank you, that was a totally random pick by me. I gotta say I'm impressed. It's the way a Nimoy works is that it'll work in every single stock. So the way stocks move, if you have a really strong, powerful move to the upside, most of the time it'll be a result of an hourly trigger, daily trigger airplane. And if you have a really strong, powerful move to the downside, most of the time it'll be a hourly trigger, daily trigger bear plane. So you'll find it on every single stock in the market. But you could see that in this airplane setup, GME came down below the daily trigger. It hovered around here. If we look at the hourly velocity, as price was making new lows here, the hourly velocity was not. So this is bullish divergence, because your most extreme print came right here. You could look at the hourly velocity. It says negative 22 cents, and then price made a new low, and the hourly velocity was negative 21 cents. So when you have divergences right under the daily trigger, it's telling you that price might want to snap right back to it. And when you have this airplane setup, what you do is you enter right above the hourly trigger. So you could see price popped above the hourly trigger right here. We could enter at 34.53 with a stop loss right below 34 for this entire move, and then we could ride it up all the way here. And if you're looking at the day trader chart, you can find hidden bearish divergences to sell at the top, or you can get out under the hourly trigger. So for GME currently, I want you guys to take a look at what's forming. You can see that the hourly trigger right now is coming down to the daily trigger, and we have a potential to form a bullish airplane setup if price pops above 26.74. Now, there was no hidden bullish divergences on the hourly velocity, so there's no guarantee that this will form, but I want to show you guys another example of something very similar. So we know we have the weekly trigger and the monthly trigger right above us. These are the most powerful acceleration levels in a Nimoy. So when price breaks above a weekly trigger or a monthly trigger, it usually leads to an explosive move to the upside. And when price moves below the weekly trigger, like right here, it leads to a powerful move to the downside. And then price moved below the monthly trigger, and it led to even more powerful move to the downside. When both these triggers are clustered together, it's called a two-trigger cluster. And so if price can break above the weekly trigger and the monthly trigger at once, that's going to most likely accelerate price to the upside. what you'll also have after that, now try not to get confused here, but if price moves to the upside, you'll have a weekly trigger, monthly trigger airplane, where the weekly trigger comes down to the monthly trigger and then resolves to the upside. So before I move on for a second, someone just asked a question, so I want to answer that. Someone says, wouldn't you have gotten stopped out at 34 in that GME example? So let's take a look. So here's where price moved above the hourly trigger, and then our stop loss, we're going to enter right here at 34.53. Actually, the hourly trigger is at 33.70, so as soon as price moves to 33.80, we're in. Now let's remove the daily trigger, and now our stop loss is right under the hourly trigger. So we would have entered on the break above, and then this entire move, we wouldn't have gotten stopped out once. So person 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, you get it? When you have this setup forming, this bullish airplane forming, you wait till price pops back above the hourly trigger and the daily trigger. So you could enter at like 34 bucks, and then the hourly trigger is going to be your stop loss for the rest of the time. And you could see you would have been able to ride this entire move up. Also, check out the velocity prints on each new high. So when price made this high, the velocity was 0.05. When price made this high, velocity went up to 0.09. When price made this high, velocity went up to 0.14. When price made this high, velocity went up to 0.18. When we made this high, went up to 0.23, and then we made this new high, which was, dwarfed all the other prints. But you can see how with each consecutive high, if velocity makes a new high, it tells you that the movement is very healthy, and there's no reason to expect the move to completely die. Over here, there was 5-minute divergences, and that's when, that you can call the top that way. So Mackenzie says, can you mind breaking down Friday's movement? I will. And then Hal Roach says, I can't wait to see some of you think you can day trade GME and it be the one time it's squeezed just after you sell. So the thing with that is, we sell under the hourly trigger. So for example, right here, if you thought GME was squeezing and we had options, right when GME breaks below the hourly trigger, we'd be out. And then you can see that, price actually gets crushed from 41 all the way to 20 to 22, 23. So even if it's a squeeze, especially if it's a squeeze in a high velocity environment, nothing is going to be better for selling than a Nimoy. Absolutely nothing. Because once price breaks below the hourly trigger, it's basically telling us that the squeeze is over. And that's what we'll be using to exit our position. But let's look at CAT, because that's a setup that I want to show that's most similar to GME right now. So let's take a look at this. All right. So we had the hourly trigger, daily trigger airplane right here, and where the hourly trigger was like hovering over the daily trigger and then started to lift up. So you can go long right here as the hourly trigger lifts up off the daily trigger, and you would have went long from 182 all the way to 229, which is a $50 move, and it happened in 1 week. So October 21st to November 3rd, so 1.5 weeks. So, we went long at 190 and we caught this move. It was kind of ridiculous. I sold very early because this was earnings. So I sold at like 197, but let me show you what caused this gigantic spike. So if you look at the weekly trigger, monthly trigger, it was essentially a very similar setup that we're seeing in GME right now. The weekly trigger is coming down all the way to the monthly trigger. They're very close to each other. Underneath that, the hourly trigger, daily trigger creates an airplane setup, which is very powerful, and it propels price straight through both these triggers at once. These two triggers are very, very strong acceleration levels, and especially when they're clustered together like this, it's even stronger. And price was able to move $40 in the span of literally 10 days due to this powerful setup, where price is breaking through the monthly trigger and the weekly trigger. And then you can see that the weekly trigger, let's remove the hourly trigger and the daily trigger, you can see that the weekly trigger starts to airplane off the monthly trigger, and I would guess that CAT is going to be bullish for the time ahead. If we go back to GME, there's no reason why we can't see almost the exact same thing, and that's where my bull thesis comes in. So you can see the same thing as CAT, the weekly trigger coming down to the monthly trigger, and we have a possibility of this airplane setup forming. So we would need price to pop above 26.74, and then the hourly trigger would start to come up off the daily trigger, leading to a fast market attack of these two triggers up here, 29.86, 30.17. If GME can break through them, right? If GME can break right through them, then we can have just as crazy of a spike on CAT on GME. Who knows how crazier it can be with, liquidity tied up in DRS and other sorts of things. Usually when you have setups like this, companies know about it and they'll announce some sort of news. Like if we go back to Cat actually had some sort of earnings thing that propelled them through the weekly trigger and the monthly trigger. And right here, and that's how it was able to power up above. So you might see something about Carl Icahn buying or something like that, but even without that, these setups, and if anybody wants to put more stocks down in the comment section, I'll go over them as well, and you'll see it always works like this. If the hourly trigger resolves up off the daily trigger, which means price needs to move above 26.74 and hold for about an hour or two, then we can have a powerful move up here to these two triggers, right? And if we can break above those, that's what you call basically like a squeeze scenario, where things get crazy and you're moving in a really high velocity environment and you're moving dollars per hour instead of 20 cents per hour. And that's why I did a lot of share buying down here, because I have yet to see, in 2 years of tracking GME, I've yet to see a setup so possible for a squeeze to occur. Meaning we had some bullish scenarios, like this was pretty bullish and we rose pretty high, but nothing beats price having a hourly trigger, daily trigger, pushing up through the weekly trigger and the monthly trigger tightly clustered together and breaking to the upside. That can lead to some really, really powerful moves like we haven't seen since January 2021 or since June 2021. And if you see the squeeze setups from back then, you'd see something very similar. So this is what I'm eyeing. Again, invalidation for this would be if the hourly trigger crosses below the daily trigger. Then it's invalidated. The setup is invalidated, and we're not exactly going to be super bullish anymore. But we have a chance right here to complete this move. So one more time, what that move would look like would be, I'm going to get through the comments in 1 second, guys. What that move would look like would be price breaking above these two triggers, 2660, 2674. Price staying above 2674 long enough for the hourly trigger to start curling up off the daily trigger. What we'd see next is a fast market attack to the monthly trigger and the weekly trigger. Now, how do I know if price can break above these two triggers or not? So first of all, the velocity on each time frame always tells you how strong the triggers are. What do I mean by that? Look at this attack of the daily trigger and notice how price failed and came back down. And then look at this attack of the daily trigger and notice how price failed and came back down. Now let's look at the daily velocity. See how negative the daily velocity was during this time period? So when price came up to the trigger, we have to expect a rejection. Over here again, when price came up to the trigger, it was coming off nasty negative velocity, we have to expect a rejection. Over here, price came up to the trigger with negative velocity, we had to expect a rejection. Over here, when price finally broke above the daily trigger and ran free, look how slight the negative velocity was. It was really slight. It was negligible daily velocity, which is what I like to call it. So look how the velocity print, if I remove everything else, you can see that the velocity print is 0.02. Over here, let's look at the times price rejected. When price rejected over here, the velocity print was -2. That's really strong. So we have to expect price to reject the trigger when we have a -2 velocity print. Over here, when price rejected, the daily velocity was -0.6, still pretty strong, and it was also coming off a -1.7, 17 cents. So still coming off nasty negative velo here. Over here, price rejected as well, -11 cents. When price finally broke through, the negative daily velocity was only -0.2, and so price was able to break above. Now, let's look at the monthly velo and what it looked like when GME rejected the monthly trigger. So let's reset the zoom. So take a look at this attack of the monthly trigger, right? Everyone was so surprised that price came back down. Everyone thought it was going to be a squeeze, but us looking at it from a Nimoy's perspective, we knew that price was going to reject here. The reason why we knew price was going to reject here is because during the month of October, the monthly velocity was -3.7. That's a really strong negative monthly print. And so when price came up to test the monthly trigger, we knew it would reject and come back down. In the month of November, the monthly velocity is only -1.1, which gives us a possible chance to break through the monthly trigger, which builds a ton of acceleration to the upside. let's take a look at the weekly velocity too. The weekly velocity, when price attacked the weekly trigger, was -1.7. We can see that the weekly trigger was right above the monthly trigger. So when price attacked the weekly trigger, we knew we have to expect a rejection in this scenario. And that's what happened. Price rejected and came back down. But now, because the monthly velo is not as harsh as it was here, it's more friendly to the idea of price breaking above the monthly trigger. Now, even though the weekly velocity is still unfriendly to the idea of price breaking above the weekly trigger, because the monthly trigger is right below, and we know that we can get above the monthly trigger, the acceleration through the monthly trigger can take us right up and through the weekly trigger. And so that's my squeeze scenario for GME. This is, you know, out of the past 2 years, this is the best chance that I've seen GME in a Nimoy to squeeze. And last time, for those that just joined, what it would look like, it would look like price above 2674 for long enough for the hourly trigger to drift up to resolve to the upside off the daily trigger. So we want the hourly trigger to come down and now start curling up here. And then we want price to make a fast market attack straight up to the monthly trigger and weekly trigger. And if we see price above 30.17 and hold, then we're going to expect to see a move similar or even greater, or maybe even a little less than this move that we saw on CAT. And this is just a perfect example of the exact same thing. The hourly trigger airplanes off the daily trigger, price makes a fast market attack to the monthly trigger and weekly trigger, breaks straight through, and that's, you know, your squeeze scenario. So let's go through some comments. In the example you made a minute ago, you showed how you rode the hourly trigger to the high, but just before the high, price broke below the hourly trigger. Please explain. Okay, so I think I know what you're talking about. Correct me if I'm wrong. You're talking about the August GME run. So right here. So let's say we were taking calls in this scenario. All right. We were taking calls off the hourly trigger, daily trigger airplane. Again, for those of you that just joined, an airplane is when the hourly trigger comes down to the daily trigger and resolves to the upside. And the way we play it is that we wait for price to break above the hourly trigger, and then we use the hourly trigger as our stop loss this entire time period. Now, first of all, first thing you need to know is that there's also a day trader chart which shows us the 1 minute trigger and the 5 minute trigger and the hourly trigger and the velocities, so that when price was at this high right here, there was tons of signs on the lower time frame velocities that was going to be the top. But your question is, why didn't we stop out here, right? Richard Diaz, that's your question. So if we were buying calls, let's say at 33, 34, and we didn't get out at the high, and we did get out at $40 on this first break below, that's still, you know, an excellent catch. Now, if you look at the daily velocity, you can see that the daily velocity was still really strong during this time period. And when the daily velocity is strong, you have to lean on and expect the hourly trigger to hold even if price falls below a little bit. So you could see, even though price fell below, because we had such strong daily velocity, price was able to make one more push to the upside. So, you know, we could have held here, you could have sold here, doesn't really make a difference. You might have caught one last push up to 44, but, you know, once you have this kind of break and price is coming down, you want to be out. I never like to be in calls below the hourly trigger. So if I did ride this move and I didn't get out here, even though there was obvious signs of bearish 5 minute divergence, which you would have been able to see on this chart at the time, I would have been out right here at $40, and that's it. You know, after a huge move, I would have taken my options. I would have put them back, put some nice profits back into shares, and then, you know, this run I probably wouldn't have partaken in. But okay, let's look at some other questions. Does it work with crypto? Yeah, it works really well with crypto. So let's see, what should we look at? Let's look at Bitcoin, for example. You can see price breaking below the hourly trigger right here, and the 5 minute trigger, if you look closely, basically provides a ceiling for price the entire time to go down. So this is called a 3 trigger cluster break. When price breaks through 3 triggers at once, it leads to a trending strong move to one side. And so we saw that in Bitcoin. Dogecoin, we also caught a really big breakout in when price was at 6. So you can see the same thing. This is a 3 trigger cluster break to the downside. Price breaks below all 3 triggers at once, and then you get this strong trending move to the downside. When I go short here with leverage, my stop loss is above the 5-minute trigger. So if I remove the mouse, you can see that I would have been able to go short all the way up here, and I could ride this down still till here and have not gotten stopped out. So we could also look at, this chart, which if I zoom in here, price broke above the hourly trigger and basically rode it up the entire time. Even over here when price dipped slightly below, if you look at the hourly velocity, it was pretty strong to the upside, and so we can expect the hourly trigger to hold for us. So even if you bought down here at 6 cents and got stopped out here at 8, you could have bought right back in at 8 and rode it all the way up to 16. So we were actually playing this with leverage in crypto. Somebody asked about HUT, I think. Let's take a look at HUT. One of my friends actually likes this stock a lot. I think he just went long on Friday. Waspy, if you're watching. So for everyone that was watching about the airplanes, this is exactly what we're talking about. So notice how the hourly trigger comes down to the daily trigger, resolves above it. So our entry would be right here on this break above the hourly trigger. We would have went long at 189 with a stop loss 10 cents below the hourly trigger. So over here the hourly trigger was 208, our stop loss would be 198. Over here the hourly trigger was 227, our stop loss would be 217. Over here the hourly trigger was 237, our stop loss would be 227, and we would have been able to ride it all the way up to 367. Because of an hourly trigger, daily trigger airplane, price doubled in price. Unbelievable, no? These setups are really strong, hourly trigger, daily trigger airplanes, and those are our favorite stocks to play. Now notice that we were coming off some really strong negative weekly velocity, and so price rejected the weekly trigger. Remember, the stronger the negative velocity, the stronger the trigger will act as support or resistance. Now, for HUT, we actually have a very similar setup coming along. So the hourly trigger is now coming down to the daily trigger. And if price breaks now above 215 and holds long enough for the hourly trigger to start curling up, we can definitely expect a fast market attack of the weekly trigger. So, this might be a nice setup for calls. The weekly velocity is negative 0.2. So it's not telling us that price can't break above the weekly trigger. It's telling us that price will definitely pin if it gets here. Well, not definitely, but likely to pin, not be able to break straight through. But it's a great shot to take even to 272, and then you could start trimming here and hold runners just in case price breaks above the weekly trigger, in which case it has a humongous gap to 447, which is the monthly trigger, which is 108% away from price. If you look at the monthly velocity has been has been getting better and better for about 4 months now. So that's a good sign that sometimes if price can break above the weekly trigger, it can fill that air pocket. If you want to see some cool examples of air pockets that we played in the past, I could show you IMVT. So this was actually, you look at the monthly velocity first and you see it's been getting better 1, 2, 3, 4, 5 months in a row. And so when price breaks above the weekly trigger, sometimes you just get fast market attacks straight to the monthly trigger. And that's actually exactly what happened. We bought this at 6. We might have sold it like 8 or 9, but there's a great example of filling an air pocket on a Nimoy. There was actually another one recently that and then we have MMAT in the air pocket right now as well. And again, here's another airplane setup. So guys, whenever price makes a huge move to the upside, it likely started from an airplane. So the hourly trigger comes down to the daily trigger, gets within 6 cents from each other. That's 88 cents. So you would go long on the break above the hourly trigger right here at 88 cents with a stop loss right below the hourly trigger, and you could still be long all the way to 159. That's a double. So you would have, even if you would have bought shares, that's 100% on shares. Now, somebody in our group caught this thing at like 103, and the options are up 700% since he caught this. But now that MMAT is in this air pocket, if you look at the monthly velocity, it's not super friendly. So there's nothing telling us that price will necessarily. We don't have a bias that price will go to the monthly trigger, but it's very possible to happen. Okay, so that's my GME squeeze scenario. If anybody has any questions, then I'll take those now. Somebody wants to look at Blackberry. We could look at Blackberry. Okay. First of all, right here you can see multiple airplanes. So here's your first one. The hourly trigger comes down to the daily trigger, resolves to the upside, and price makes a nice move up. Comes down to the daily trigger again, resolves to the upside, and price moves all the way straight to the weekly trigger. This is a very common setup. You have an airplane setup and price runs straight to the uppermost trigger. Now, if you look at the monthly velocity, there was nothing really telling us that price wanted to attack the monthly trigger because monthly velocity wasn't getting better and better each month, but you could still see the way that these two airplanes pushed price higher. Now over here we have a beer plane where the hourly trigger comes up to the daily trigger and resolves to the downside, exactly the opposite, and price gets crushed. And here you have another beer plane, the hourly trigger comes up to test the daily trigger, resolves to the downside, and price gets crushed. Now, if we look at the weekly velocity, nothing really telling me that price wants to move up to the weekly trigger and also the monthly velocity. So the only way I'd be bullish on BB is if the hourly trigger crosses above the daily trigger, and then you could see a lot of bullish momentum coming back into the stock. So people want to see the GME rundown on January 2021. Hopefully one day I can make a video about that. Right now that data isn't available to show, but it would be nice to one day be able to show you guys how the squeeze looked on a Nimoy and how easily you could have been in and out of your positions. If you want to track the GME scenario live this week, if you want to see if it's playing out or not, you can make a free account. I think the link is in one of the comments. I could just put it there right now if you give me a second. It's completely free, in case anybody was wondering. So there's a link I just put in the comment section if you want to track it along, and you can view the day trader chart as well. So let's take a look at the GME movement on Friday. So I don't know if you guys saw my tweet, but down here we saw some nice bullish divergence on GME, and that led to this move up. And so also, the same way the hourly trigger and the daily trigger works, the exact same way the 1 minute trigger and the 5 minute trigger works. So look at this beautiful bullish divergence from GME. Let's take a look at the 1 minute first, and then we'll look at the 5 minute. So here's your most extreme print to the downside. If you look at the 1 minute velocity, it reads -0.5, and then price makes a new low here, and velocity does not. That's a bullish divergence, because if it's bearish, then velocity should be making a new low with price. If velocity is not making a new low with price, then we're getting ready for a reversal. And here's your second bullish divergence, and price reverses to the upside. If you look at the 5 minute velocity, we had something very similar. Here's your most extreme print. So that when the 5 minute and the 1 minute are in agreement that the pushes down are fake because velocity is not making a new low, that's when you get ready for a reversal. And that's when I tweeted at 12:55 that we're starting to see some bullish divergences on GME, and price was at 12:55, price was 25.56, and price moved up a full dollar. So you know, here's your reversal, and then once the 1 minute trigger crosses the 5 minute trigger, that's when the stock starts to move a little more bullish. Now we're below the hourly trigger, so this is a very important level to get above, but the way Nimoy works is that everything works the exact same with all the triggers on all the time frames, whether it's a 1 minute trigger, 5 minute trigger, hourly trigger, daily trigger, weekly trigger, monthly trigger. All the rules are the same. The stronger the velocity, the stronger the trigger will act as support or resistance. When the 1 minute trigger crosses above the 5 minute trigger, it's bullish. When the hourly trigger crosses above the daily trigger, it's bullish. When the 1 minute trigger crosses below the 5 minute trigger, it's bearish, like right here. And when the hourly trigger crosses below the daily trigger, it's bearish, like right here. So it's a very simple method to learn. And it's a whole lot better than technical analysis. Technical analysis can take years to learn. This takes about a week and a half, and I have plenty of tutorials on my channel if you do want to learn. So if anyone else has any questions, then I'll take them right now. Otherwise, I just wanted to talk about the possible GME squeeze scenario, and then I was going to get off. So if you have any questions, I'll stick around for like 5 more minutes to take them. Otherwise, I'm gonna close the stream. Oh, you know what? There was one thing I wanted to show you guys. Check this out, actually. I want to show you a setup called Whack-A-Mole. All right. This is a gift, basically. The setup is literally a gift. So let's talk about C. What was it? Foam C? Yeah, it was Foam C. So let's talk about Foam C this week and how we could have played it. All right. So when price attacked the hourly trigger into Foam C, right, what was the velocity telling us? The velocity was -2.7. That's a strong print on the negative velocity. So it tells you, since negative velocity is strong, if price attacks the hourly trigger in this hour, then it's called a whack-a-mole setup, and we expect a strong rejection. This was during Foam C, so it doesn't matter how news related the stock's move is, everything's predetermined and everything's calculated, and a Nimoy is reverse engineering the algos in the market. So when price came up to attack this hourly trigger right here with negative hourly velocity, it's a gift to the short side. This is where you go short, because you know that most likely price is going to have to reject this hourly trigger because velocity is negative. And as you can see, price got absolutely creamed to the downside. Now watch this, all right? 3 bullish divergences. It works on every single time frame: 1 minute trigger, 5 minute, hourly, daily, weekly, and monthly. So here's your most extreme print, all right? And price at the time is, let's say, 262. So here's your first new low, 260, and you could see that the hourly velocity did not make a new low. So that tells you that this move is starting to get close to reversal, and after 3 of them, we have to expect a reversal. Here is your second low. We could call, well, this was 260, and this looks like it's also 260. So we'll go with this one, like a little more of a move down, 259.39. So here's your second low, and velocity obviously is not as strong as it was here. So 1 bullish divergence, 2 bullish divergence, and when price makes this third low right here, that's your third bullish divergence. And once you have 3 bullish divergences, that tells you that price is now going to reverse to the hourly trigger, and this is exactly what happened. I actually played calls on Friday. I played 0 DTE calls, which means that they expired in a couple of hours. And what I did was, for confirmation, I waited till the 1 minute trigger, or I waited till price broke above the 5 minute trigger. After you get your 3 divergences, you don't just enter off the bat, because price might still be coming down a bit. But once price breaks above the 5 minute trigger, that's when I went long. And you get your added confirmation when the 1 minute trigger crosses the 5. So I went long right here with 260 with 262 calls, and price actually reversed all the way up to 264, and those calls went 500%. I sold at 80% because I don't want to be greedy and I want to lock in my gains, but this just shows you how simple and easy a Nimoy makes it for spotting reversals. You wait for your 3 bullish divergences, and then you wait for price to pop up above the 1 minute trigger and the 5 minute trigger. You can be a little risky like me and enter above the 5 minute trigger with a stop loss right below, or you could wait for the 1 minute trigger to cross the 5 minute trigger, which we know is a bullish trigger cross, and then you could enter right here and ride it until you get divergences. Now, if we look for bearish divergences, here was your most extreme print to the upside. Here's your first new high, here's your second new high, and here's your third new high. And then price reversed back down to the 1 minute trigger. If you look at the 5 minute velocity, here's your most extreme print. So you have 1 high, and then you don't have 3 bearish divergences. So technically there was no reason to fully get out of this position on Friday, but that's how I traded it. You could actually also see the 5 minute velocity diverging bullishly. So let's take a look at this. So here, let me do one more zoom. Okay, let's remove this. So look at here. Here's your most extreme print to the downside, and the negative 5 minute velocity is negative 22 cents. Price makes 1 new low, and then another low, and then on the third low, 3 bullish divergences, because velocity never made a new low from here. That signals your reversal to at least the 5 minute trigger. I actually have a rule book on how I play these kind of moves. I have it written down. If anybody wants, I could DM it to them. This is like my official Nimoy rulebook on how I play calls. It works for every time frame, whether you're swinging calls, whether you're day trading calls, puts, leaps, shares, everything. So if you want to screenshot this now and review it after, or you could just DM me on Twitter and I'll send it to you. Okay, so I'm done. I said my piece. If anybody has any questions, I'll stay on until 7:55, and then I'm gonna close the stream. Thanks so much for tuning in, by the way, everyone. Hope you learned something, and I'll keep updating on Twitter if the GME plays out like it can. Thanks, DJ Sutton. Thanks, Ralph.
I'm getting excited. Thanks for the stream.
Who is that?
That's Moon.
Oh, yeah, Moon. Let's get it, man. This can be it, you know? Again, I've been watching this since the squeeze, so if there was ever a chance, this is the best one. Ransom says, what's your Twitter handle? I will link it right now in the comments, if I know how to find it. You know what? I don't know how to find it, but I'll send you a tweet. I'll link a tweet, and then you could just use that.
Alright, I gotta run. Thanks for the stream, James.
You got it, man. Have a good one. Let's crush it this week.
You too. See you tomorrow.
See you tomorrow, man. Sally Lou says, you mentioned about your group. How do you join your group? So if you have like a decent amount of options experience, then you could shoot me a DM. But this is the group basically. You have the trading room, you have the main room, you have the profits channel for gains. We actually hit big on MMAT this week. We went long to MMAT. We have daily video recap from all the trades that we take. We post them here. Chart requests, like if anybody wants something charted. We have a fantasy league. We have the GME trading plan, which I probably shouldn't show. We have 3 trigger clusters, which are like very strong Nimoy setups, like this one, where price breaks above 3 triggers at once. By the way, you can actually see how here was your most extreme 5-minute print, and then price made 1 high and then 2 highs, then reversed all the way back down because velocity didn't agree on the move up. We have our Nimoy group where we post like different Nimoy plays, and we're actually going to go along INTC this week because INTC, if you can see clearly, here, you know what? I'll just show it to you guys. We're going to go along INTC because we have a hourly trigger, daily trigger setup, which is exactly like we talked about this entire stream. And we love playing these, especially using very, very good risk management if you follow the rulebook that I shared before. But you could see how the hourly trigger came down to the daily trigger, got really close to it, and now the hourly trigger is starting to lift up off it, and price already broke through. So we can expect price to make a sharp attack of this weekly trigger at 34. So we're going to be going long INTC as long as price opens on Monday above the hourly trigger at 27.89. And then we have Gavin's alerts. We have my alerts. These are some plays. So here's the INTC we're going long. BBBY we're going to take some weeklies. And then we have, a couple of other people. We have Casino Real for like lottos. Like here was MMAT, Pure Lotto Go Light MMAT 1.5C for 10 cents. Then I wrote less of a lotto. I just doubled my position. And then MMAT went up, 18% in a day. So they went 11 to 24 over 100%. And that's when we cut. We have swing trades. This is like for more longer term. So we're long some Biofarm, Leaps. We're going long Surrey. We actually went long Acor right up here. And if you take a look at Acor, this was crazy. So this was October 25th. Watch what happened to Acor. These went nuts. Check this out, guys. So first of all, The monthly velocity, notice how it's getting better every single month, so that's very friendly. And the weekly velocity, notice how it's getting better every single month, so that's very friendly also. It's telling you that like the negative presence in the stock is weakening. Now check this out. October 25th, which is when we went long, price was at 54 cents, and price spiked all the way up to 117. So over 100% from entry to exit, October 25th to October 31st in 6 days. So pretty crazy. Here's where we alerted the calls, October 25th. And then where'd we get out? Where was it? Oh, here's when Acor started moving, you know, up 37% in 1 day. And then looking to blow out of Acor calls at 1.20. Lock in some Acor gain, please. Just lock it in. And then please trim Acor, 1031. So on 1031, that was right here. I think that was on the day of the explosion still. Yeah, so October 31st, that's when we cut them. What else do we have in here? Oh yeah, we have Ortex data, and then we have an Elliott wave forecast for the entire market. So a lot of times what we'll do is we'll take Gavin posts like his Elliott wave projection. Let's say this is for SPY. So we'll look through the list on the weekends, Apple, AMD, Amazon, Google, and we'll find something that makes sense with a Nimoy. Like take, what stock is this? Take AMD right here. So AMD, the waves have a pop to 70 and then down to 50. So what I do over the weekend is I go here and I check which ones fit the best with a Nimoy. And when something fits well with a Nimoy, then we'll play it. So he's saying to 70 and then back down. So that makes sense because you could see we're getting really tight here. And if price breaks above the daily trigger, it can shoot towards 80. So, you know, if Gavin's waves are telling us that he thinks price can move up to 70 now, price is currently at 62, then we can go long above the daily trigger right here at 62.57 or 62.54. We'll have our stop loss using the day trader chart. Let's say we'll have our stop loss right under the 5-minute trigger. Let's remove some of the noise. Let's say we'll have our stop loss right under 61.63, and then if price is going to move all the way to 70, we can ride an $8 move up to the upside. And then if we're seeing bearish divergences form at 70, we can cut them right there. BOR, I could take a look at BOR, but I really got to get off. It's already been an hour. BOR, so let's take a look at the weekly velocity. So I will say this, here's your most extreme weekly print, and now price already made a new low without velocity making a new low. So this is one bullish divergence. If you see 3 bullish divergences like this, you can see price go straight back to the weekly trigger, just like Mullen did. And we played Mullen as well. But let me show you what this looks like. Mullen had 3 weekly bullish divergences. So here was your most extreme print to the downside. Price was like 103. And then here was your first new low, 78. Here was your second new low, 63. And then on this third new low, price just exploded all the way to 60. It didn't get to the weekly trigger, but still made a really nice move to the upside. Usually price will get to the weekly trigger, so this isn't a common thing. We definitely expected price to get to the weekly trigger, but we went long at 23, and once price broke below the daily trigger, that's when we cut. I think we still managed to get 100% out of it. All right, guys, so thanks everyone for joining, and I'm going to close it up. If you have any questions, always feel free to DM me. My Twitter handle is JROL17 and then _. So you could always DM me with any questions. I think I posted the link up above if you want to create your own free Nimoy account. And have a great night, everyone.